The saying, "keep it simple, stupid," isn't an insult. It's a design principle attributed to a legendary aircraft engineer working for the US Navy in about 1960. According to the story, Kelly Johnson handed a team of design engineers a handful of tools. He challenged them to design a jet aircraft that an average mechanic could repair under combat conditions with only the tools he'd given them. I was first introduced to the KISS principle by an accounting instructor in college, and for the longest time, I thought it was one of the fundamental accounting principles. Over many years of going to school, learning, which isn't the same thing, and working, I've learned that keeping it simple just makes sense. In many ways, working with very small businesses as a public accountant isn't all that different from aircraft repair under combat conditions. Bookkeeping and record keeping are often done badly, and key bits of data may be missing. Despite this, we do our best to manage our clients' tax compliance needs, and in my firm's case, to help them qualify for generous tax incentives for R&D. Keeping it simple allows us to build adequate accounting systems on the fly. I use my clients' recollection of what happened and compile transactional data from online sources to build a comprehensive financial picture of what happened during their most recent tax year. In part 3 of this 3-part series on accounting systems design for very small businesses, we focus on some key design principles and concepts for designing these systems. In short, we discuss how to do systems design. I have to admit here that I really don't understand the difference between a principle and a concept. Most accounting textbooks provide long lists of fundamental accounting principles and underlying concepts. But I did note that standard dictionary definitions list assumptions as synonyms of both words. In other words, I suspect that my occupation of accounting sometimes deliberately complicates things, presumably to make practitioners appear more educated. Getting stuff to appear simple is sometimes harder than it seems. Legendary US investor Warren Buffett has been quoted as saying, "Business schools reward difficult and complex behavior, but simple works better." The point is that when we're designing systems for non-accountants working in the very small businesses that dominate our Canadian economy, public accountants have always known that keeping it simple works better. I spent over a decade working for small accounting practices and later for Revenue Canada on Vancouver Island. During that time, most of the systems we designed or encountered were single-entry, cash-basis journals. They worked because they were simple. Public accountants designed cash receipts and disbursement journals, sales journals, and payroll journals that their clients understood. These worked because they were simple, single-entry systems. We didn't confuse our clients by trying to explain the intricacies of double-entry bookkeeping or the theory behind the balance sheet equation. So the first and most important concept or principle that we discuss in part 3 is the KISS principle. Next, we'll discuss 2 key concepts that build on the idea of simplicity. One of 2 key concepts critical in designing simple and effective accounting systems for small businesses is to start by exploiting naturally generated information. Many years ago, I worked with the Canada Revenue Agency's fledgling scientific research and experimental tax credit program group in Victoria, BC. When evaluating submissions under that program, we looked at naturally generated documentation to support the adequacy of claims under the program. Most of the claimants in the Victoria office were software developers. Software developers aren't bookkeepers and have little or no interest in doing the books, but they do write source code for programs which are stored in dated text files. They also log their time in timesheets and are responsible for charging time to projects. They attend daily or weekly meetings or scrums to discuss issues or problems that come up during their work. And they send each other emails discussing these issues. For them, naturally generated documentation might include emails, computer source code, repositories for software source code, timesheets and project management systems, or meeting notes from daily scrums. All of these are examples of naturally generated information that can help in determining what developers worked on and when they did. Claimants can use this information to allocate labor costs to projects. In their wisdom, the scientists and engineers responsible for designing the R&D incentive program understood that this was the most reliable and readily available data for substantiating claims under the program. More generally, the same principle is true for almost all small businesses. The self-employed and those working in our smallest businesses aren't bookkeepers and aren't really interested in becoming accountants. However, every time a business buys or sells something, some kind of naturally generated record is generated. The most obvious of these records are bank and credit card transactions. When I first began work as an accounting intern in Nanaimo on Vancouver Island, we relied on the bank statements and cancelled checks that arrived in the mail each month at the offices of our small business clients. Our clients dropped off a set of envelopes received each month over the previous year. Our job was to transcribe the transactions from the statements to a journal we designed for them on columnar paper. This was most often a cash receipts and disbursement journal, though we generally referred to it as a synoptic. We then totaled and cross-balanced the columns in the journal and then posted the totals to the general ledger, or more often, to a synoptic summary for the year. These days, the general ledger is more notional than physical. In the early days of my internship, we sometimes kept a physical general ledger in a separate book for each client. Then we transcribed the totals from each ledger page to the trial balance columns in the working trial balance. This was the key component of each public accountant's working paper file. While accounting software publishers would like to pretend that their accounting software can function as a replacement for the accountant's working paper file, that's really wishful thinking on their part. The working paper file is a kind of virtual sandbox that allows us to draft prototype financials and post these to our client's tax file. We then discuss the drafts and, most importantly, the tax return with our clients. Once we have their sign-off, we finalize and file tax returns on their behalf. In the 1980s, paper-based systems for our smallest businesses generally included naturally generated documents such as bank and credit card statements, copies of invoices issued to customers, and copies of purchase invoices and cash-paid receipts to suppliers. Thankfully, these days, someone else does most of the heavy lifting when it comes to recording these transactions. With the exception of the bills we provide to customers, all of the transaction records originate with someone else. Even when it comes to revenue, our banks create records of cash receipts. A great many suppliers email us purchase receipts. We can simplify our accounting systems by designing systems that harvest these online records automatically. Reproduced on this slide is a page from my bank's website relating to my business account. Note that I was able, at the time I put this together, to retrieve fully 7 years of transaction data. That's easily enough to satisfy the document storage requirements for Canada's tax department. What's more, the transaction data can be downloaded into a comma-separated value file. These can be loaded into virtually any of our popular commercial spreadsheet programs. This brings us to the second key concept for systems design: leverage existing technology and tools where possible. Many years ago, I realized that the first commonly used accounting packages were often misused. In the mid-1980s, while working at the Canada Revenue Agency as an auditor, I came across many instances of bookkeeping firms treating commercial accounting systems as though they were expert systems. The truth is that these systems were adequate systems for experts. However, it didn't work the other way. Unskilled bookkeepers and careless accounting firms could process vast amounts of data incorrectly and in a hurry. When I first went out on my own, in about 1990 as a public accountant, I set about trying to develop a rudimentary bookkeeping system using a program called Clarion Professional Developer in my spare time. After a while it hit me. Commercial spreadsheets were easily understood and commonly used by my clients. It was better to leverage that familiarity to build custom systems that worked than to develop completely new and unfamiliar systems to enforce a process that was new to them. I trained one of my clients to use a commercial spreadsheet to write up her bank account transactions at some point in the early 1990s. More than 20 years later, when I returned to Victoria from Vancouver, she told my wife, who happened to go to their optometry practice, that she was still doing her write-up the same way that I had taught her 2 decades earlier. Banking information, payroll source deductions, and other transactional data are often maintained by others. These capture financial transaction data, which, after all, is what we need to compile financial statements. Most involve a corroborating third party, which increases the reliability of the data. Ideally, records are date-stamped, which is important for determining timing. That's important for determining how to allocate employee time to projects, which is critical when claiming tax incentives for R&D for specialists like my firm. Of course, every business is different and has somewhat different information needs. One key skill of today's accounting systems designer is to help businesses identify relevant, naturally generated data and provide ideas and processes for storing and retrieving it. In this third and final part of our series on accounting systems design, we've explored three principles, or one key principle and two key concepts, for designing accounting systems for our smallest businesses. In our view, today's online accounting packages can be good value for some small businesses, but most often the value relates to issuing invoices and facilitating collections from clients. These systems work best with an experienced bookkeeper to operate it. Most systems lack effective and easy-to-follow audit trails, since they rely primarily on online banking information to function as a journal. This will significantly increase the costs for an external accountant to produce accurate financials. Unlike today's online accounting software, paper-based systems from the 1980s and 1990s incorporated the general ledger function into the accountant's working paper file. This meant that accurate financial statements weren't generally available on a timely basis. Businesses needing accurate and timely financial statements to manage their business would be shift out to luck, unless they had an accountant on staff. Accurate financials are most commonly available for our smaller businesses a few months after the year end. The same is true whether the business uses online accounting software or simply outsources the work of compiling their financials at the end of the year to a public accountant. Thankfully, changes in technology since the 1980s have meant that small businesses can easily leverage technologies they already have, like cloud-based storage, commercial spreadsheets, and email, to build simple and effective systems at a very early stage. With a little ingenuity, their public accountant should be able to help them build such systems on the fly, in the same way that their predecessors did with paper-based systems 30 or more years ago.